Hello and welcome to Project Trade. This is the Technical Indicators Show, and today it's the awesome oscillator indicator, and it's coming from Bill Williams in 1998. This one was included in his book New Trading Dimensions, which was one of his most popular works alongside his 1995 book Trading Chaos. The awesome oscillator is a momentum indicator. It's a boundless histogram with a zero-line crossover. Boundless meaning that there is no upper or lower limit to the oscillator's value, unlike say the relative strength index, which uses a scale of 0 to 100. Let's check out the formula that makes that magic. And there it is. All we do is subtract a 34-period simple moving average from a 5-period simple moving average. Essentially a slow moving average being subtracted from a fast moving average. Just note with the awesome oscillator that when it does apply itself to the price, it uses the median price. That's the high and the low price of the period divided by 2. There's the histogram, and you can see our zero line cross in the middle there. We're just using red for downward momentum and green for upward momentum. Another example here, this time we've included the price, and I've also plotted 2 moving averages on the chart. That blue line there is a 5-period moving average, and it's keeping pretty tight to the price. And then the brown line is the 34-period average. I'll pull up these yellow marker lines, and you can see how when the 5-period crosses the 34-period, that's when the histogram crosses 0. The awesome oscillator may show the crossover and the convergence divergence of the averages a little clearer, but it's not really offering you anything new. It's basically just a moving average crossover ham-fisted into a histogram. And apart from the colours of the histogram bars, we're not allowed to change the settings either. Which means that Bill Williams must think that if it ain't broke, why would you want to fix it? Obviously, Bill Williams nailed it and got it spot on. Because if he thought that you stood a chance of actually being able to improve the indicator by changing the settings, then he'd let you be able to do that. And so what entry signals is this indicator giving us? Even though it is a bit of a basic one, Bill Will did give us a few starting points. The most obvious one is the zero-line crossover. So when the readings of the histogram bars flip above or below 0, that is your time to enter. Here's what that looks like, and we would wait for the close of the first bar, so we would open our trades where we've marked the ones in yellow, the ones with the big arrows pointing at them. Waiting for the closes to make sure the indicator has crossed 0 properly and is not just for a fleeting moment there. But even when you try your hardest and you do end up getting your entry spot on, you can still end up in a range. It is going to give you a lot of entry signals, and even a big move like that one there is not going to save you from a quick house remortgage. So beware the range. Next in our signals, we've got colour changes of the bars indicating convergence or divergence for the moving averages. If you are using a green up red down colour combo like me, then you would enter a buy trade after the bar closed green and a sell trade after the bars closed red. This is of course going to give you a lot of false signals, and you're going to end up in a hokey pokey themed situation which will probably end in tears. However, there is a Bill Williams endorsed strategy based around that concept, and that is his saucer strategy. Saucer entries try to get you into new momentum on an existing trend. They can come as either bullish or bearish. For a bullish saucer pattern, the awesome oscillator must be above the 0 line and 2 red bars come followed by a green bar. That green bar, as the third one in the pattern, indicates that momentum could be returning to an upward trend. Here's a couple patterns on our oscillator if you hadn't spotted them already. After that green bar on the right side of the box closes, that's when you'd enter a buy trade. And for our bearish sources, you just twist that around, which means they will occur when the awesome oscillator is reading below 0 and there are 2 consecutive green bars followed by a red bar. That is when you would enter a sell trade. Can it go wrong though? I think you know it can. Here's a low momentum range example that's got you into 3 back-to-back sell trades which have all immediately reversed. If you are trading those signals with real money, then you could easily fall into a psychological mess. But that is the saucer strategy, and just like the awesome oscillator itself, it does feel a little inflexible. But maybe on a rare occasion it will come through for you. Then we have the twin peak strategy, which as the name suggests is looking for 2 peaks in the value. Again, it can be split into bullish and bearish. A bullish twin peak is where the awesome oscillator is reading below 0 and there are 2 low peaks in the oscillator, with the second peak being higher than the first. When a histogram bar closes green after the second peak, you could take that as an indication to enter a buy trade. In this example, you'd be entering at the start of that bar right there after the second higher peak completes. And you can see in this pre-selected chart that you would catch quite a few green bars, whereas by the time the oscillator histogram crosses 0, the momentum has slowed and it quickly gasses out before turning south again. This strategy tries to get you in earlier on those trends than the 0 line crossover, but inevitably it can give you more false entries. On the flip of the bullish twin peaks, we have the bearish twin peaks. This is where the awesome oscillator value is above 0 and you can see 2 peaks on the oscillator where the second high is lower than the first. Once that histogram bar closes red after the second peak, that's when you can get into a sell trade. We can see again this proves more effective than if you're using the 0 line crossover, because by the time it actually crosses below 0 there's hardly any momentum left, and it quickly flips back above 0, showing that you missed the move. So do give this one a go with some good coffee and cherry pie if you feel like you're getting into those trades too late with the 0 line crossover. Moving on, I am going to have to give you some very generic 101 advice, which is that no single indicator is going to work on its own, so do combine it with others. If the awesome oscillator 0 line crossover worked consistently as a sole indicator to make us cash money, then there would probably be a Bill Williams statue towering over the Lincoln Memorial. So please do keep that in mind. Now let's have a look and see if that awesome oscillator can help us still with our money management. You could always take the histogram crossing 0 against your trade as a signal to exit, because you will find that some indicators are better at telling you when to get out of a trade rather than when you get into it. You could also use X number of bars closing against you for an exit signal, i.e. the 5 and the 34 moving average are moving closer together for say 3 bars, and you could close your trade then. That type of exit gives the price a chance to try and regain trend momentum, but it shouldn't push your trade too far into the deep. That said, a lot can happen in 3 bars, especially if you're on a monthly chart, so do beware of it falling off the cliff. If you are using the awesome oscillator, you're going to be fine using it in any of the markets. There's not going to be anything unexpected trading it in metals, say, compared to Forex. And whilst the daily chart is probably going to be the most consistent time frame for it, that's just kind of true for most indicators, and it's the safest play if you're unsure of what to go for. Unless you're like me and you love that noise on the 1 minute and 5 minute charts. But do watch out for those big market moments. The awesome oscillator is using moving averages, which are always subject to getting thrown out by things like market gaps, stock opens, job reports, etc. And if my sales pitch today hasn't convinced you of the awesome experience, then don't worry. Bill Williams did create another 0 line crossover, which is also in the form of a histogram, and that is the accelerator oscillator, which is in fact a derivative of the awesome oscillator. In short, the accelerator oscillator tries to smooth out the awesome oscillator, and it does this by taking the current awesome oscillator value and subtracting from it a 5-period simple moving average of the awesome oscillator. Here they are with the accelerator on top there. It's giving you a lot more signals than the awesome oscillator is, which could be detrimental for your monies without a good risk management system. But can you change the inputs of the accelerator oscillator? Again, you cannot. Bill Williams designs perfect indicators, so it is as it is. Another similar indicator to the awesome oscillator, or at least part of it is similar, it's the MACD. And although the MACD has other elements to it that do make it a more in-depth indicator, both of them are using convergence-divergence on a 0 line histogram. There's not a lot of indicators that you can compare the awesome oscillator to outside of the ones that are giving you 0 line crossover signals, which there are plenty of at least though. The absolute strength histogram, the Lotus, those are a couple more in histogram form, but do not forget that the awesome oscillator is just convergence-divergence of a 5 and a 34-period moving average presented as a histogram. But moving average crossovers are completely changeable, so you're really able to put your own preference into it and take control yourself. To sum things up, we first have to wonder whether the awesome oscillator was Bill Williams' finest hour. Was it his magnum opus? Was it his perfect game? I think the tough and gritty answer to those questions is no, it was not. And in fact it has very little individuality as an indicator. It's giving you pretty minimal signals and none that are that reliable for getting in or out of trades. People's minds may have been absolutely blown away by this in 1998, although probably not, but certainly today traders' minds are very unblown. It might find some better use as a filter when you're only taking buy trades above 0 and sell trades when the histogram's below 0, but a fair rule of thumb is that there are better indicators out there than the awesome oscillator. But if you really want to know more, then there will be a couple links in the description. And just in case you thought that this one did work, do not forget that every single oscillator and chart I show you has been completely pre-selected, but we have still used this one in live forward testing strategies, and those videos will be in the description as well. This is Project Trade, and we are the Bernie Madoff Tribute Fund. Thank you for watching or listening.